So, Rowan, if you wouldn't mind, would you like to just give us a breakdown of seasonal tokens and where, as a project, we are right now?
Absolutely, yeah. So what we've designed is a system of tokens that's designed to be used with an investing strategy called seasonal investing. This is where you take advantage of cycles in prices instead of relying on an investment or an asset price that just continually increases in value. You can take advantage of asset prices that cycle up and down in value. These are just as good as asset prices that increase in value as long as the cycles are reliable and regular. It's possible to invest in them and to profit from them by basically buying and selling at the right prices. And it works especially well if you have a collection of assets that have prices that cycle around each other, so that you can trade the more expensive one for the cheaper one, and that becomes the more expensive one later on. You can trade that for the cheaper one, and so on. So it's a very standard, well tested, and reliable and relatively low risk way of investing, and it's better than investing. It's lower risk than investing in a project that you think is going to become popular, because you're not relying on the popularity, you're not relying on asset prices increasing over the long term. Instead, you're taking advantage of reliable cycles in the prices. So what we found is that we can induce these reliable cycles in the prices using proof of work mining. There are cycles in the Bitcoin price. We could take advantage of the same mechanism with seasonal tokens to have cycles in 4 different token prices, so that they cycle around each other. And that allows you to hold an asset, wait for 9 months later, trade it for buy an asset when it's the cheapest, wait for 9 months, it becomes the most expensive, then trade it for the one which is cheapest, that becomes the most expensive. 9 months later, you can trade that again for the cheapest. If you keep doing this, then that means that the total number of tokens that you have keeps increasing over time. You can accumulate a larger and larger portfolio of tokens as time goes on. And this is basically a better way of investing than the buy and hold strategy. If you just buy 100 tokens and keep them, you're going to have 100 tokens forever, and you'll be relying on the market price increasing in order to make a profit. But if you take advantage of the cycles in the prices by trading the expensive ones for the cheaper ones, then that means that you don't actually rely on asset appreciation. Instead, you're relying on seasonality. And this investing strategy, seasonal investing, has been very widely used, very successful, and it's relatively low risk in comparison to other investing strategies.
To learn more about seasonal tokens, check out this playlist.